Hello, welcome everyone to the Advanced Financial Statements Analysis. My name is Rudy Falat, and I'm going to give you a little bit more information about this course coming up from Columbia Business School very soon in cooperation with Emeritus. So thank you so much. A little bit about myself. I've been leading several courses at Columbia Business School, including M&A, scenario planning, options trading. This one is another one, Advanced Financial Statement Analysis. It's a great one that I'd like to talk to you about. And my background is that I've been working in finance for more than 20 years, starting in New York in financial reporting, in Kraft Foods, and then moved to Treasury, internal audit. Then I did an MBA at INSEAD, and I worked in M&A and corporate development in London and in Zurich, Switzerland. Thank you so much. And I'm going to tell you a little bit more about the faculty, because you will be watching faculty in the asynchronous part of the course. And you see here, Doron Nissim is an Ernst & Young professor of accounting and finance at Columbia. He started at Columbia in the late 90s, and he's very well known in the field and also through his publications in the media, Bloomberg, the New York Times, the Wall Street Journal. You will see him everywhere, and very well versed in the topics that this course is focusing on, such as financial accounting when it relates to investing, earnings quality, right? The fundamental analysis, valuation, and investment management, whether that relates to financial institutions or other institutions, and research. So I think hopefully most of you, if not all of Columbia University, and this is a great university because it's the only Ivy League school in the US that is located in a business center such as New York City. That's why it's relevant for business people and leaders. And not only that, it's not only the business school, but it has also obviously other schools as well. Many of those produced new Nobel Prize winners and many other distinguished people in their respective fields. So maybe let's go back to that previous slide. All right. And we have time. The precision financial analysis yields more than or yields better investment outcomes. This is the ultimate thesis or background for this course, right? Because people can look at the assets that they are trying to invest, and sometimes the discipline is lacking, right? And this is what we're trying to bring here, trying to find insight out of all the public information you can have, looking at the financial statements, and that obviously can give you the edge if you see through the disclosures that now are hopefully better than ever, but sometimes still need an insight and skill and the knowledge that is lacking. And through this course, you can get that. So who should attend, right? It's institutional and individual investors who want to be even better at their job, middle-level finance professionals, of course, banking or private equity professionals as well, who make investments for maybe a bit longer term than the traders, and the risk analysts or the credit risk analysts, risk managers, and of course, always the consultants and advisors, right? So I think this is a great group of people that can actually also learn from each other. We will tell you more about how this works, because this is not only a passive course. You will be having many opportunities to interact with your program leader and with your classmates as well. And there is a great overlap in the skill sets that all of you as professionals bring to the table. And I think this is a great mix of people that we typically see in these courses, right? Everybody has a different touch point or a different vantage point when it comes to the topics, such as the financial analysis in this case. First of all, we'll start with the fundamentals of financial accounting, right? So we need to level set. As I said, many of you are involved in financial accounting or financial reporting and the analysis and using it for investment decisions as well. But this is something that we need to go through. Be patient with us, as is the case in all the courses. We will release content on a weekly basis, so you won't see all of it in one go. And then we move on and look at what is really the first step you should do when you understand the theory and the form of the financial statements. Then you should focus on the quality of the earnings, right? Quality of the earnings, disclosures, and how that is related to profitability and then solvency and liquidity as well. We'll use case studies of real life companies, of course, the ones that you know from your day-to-day experience, like Google, Alphabet, Costco, and Tesla. We will talk about the valuation and how you should look at the value of the company using a variety of methods and scenarios. We'll give you a proprietary Excel workbook from our faculty that allows you to apply these concepts in real life. And then we will leverage the financial insights that you get from financial analysis in investment decisions, and we'll practice that a little bit. So Foundations of Financial Accounting is our first module, and we will teach you, or we will recap, if you have been involved in this already, how to interpret the financial statements, including the P&L, the balance sheet, and the cash flow statement, of course. We will focus on the difference between the accrual and cash accounting, because most of the accounting standards in this world, they focus on accrual accounting. They try to match the time when you earn the revenue with the recording of those revenues, and the expenses the other way around as well. On the other hand, we do need to know our cash position as well. So that's why we have a cash flow as well, which is complementing the P&L and the balance sheet. We'll give you a tutorial on transaction analysis, because of course it relates to the working capital. If we use this as a middle ground, we will use look at the industry. And in most of the countries in this world, when it comes to industry, companies trade on credit. You have, as a result, accounts receivable on the balance sheet. On the asset side, you have accounts payable. On the liability side, you might have inventories, of course, as well in the middle. So this is very important. How do you book it? How do you record it? How should you think about it? This is all that you will learn or revisit in the first module. So in the second module, I think we'll focus on what is truly fundamental and distinguish people that know superficially what the financial statements are, and the people who can actually use it to their advantage. Well, you need to have a critical look at the financial statements, even though they are audited, they are produced by publicly listed companies, traded companies, but we need to have a look whether these statements or represent the reality or the financial reality, so that we can use this going forward. We can use it for evaluation. And that's why we need to talk about quality of earnings, meaning we are trying to find earnings that are recurring. So we are trying to find out one-offs that maybe management aggressively tried to put into the financial statements in an effort to make them look better, more attractive. We'll try to find out how to get rid of those sort of one-offs. And also there may be other issues. I'm not saying this is a financial fraud course or anything like this. It's not, but there may be a gray zone, right? So what you are looking for is sustainable, or in other words, recurring earnings. And that's really the focus of what's also important in the following weeks when we will talk about evaluation. All right, profitability. You can see here that we're going to talk about comprehensive profitability analysis. Meaning, when you are looking at financials, I would say when you look at the financial statements, first of all, you start with history. Ideally, you start with maybe up to 5 years of history, meaning that you need to add growth rates, you need to add margins, relative view of the financials when it comes to P&L. When it comes to balance sheet, it would be about relative balance sheet, so portions of the total assets and how that changes. But as I said, we need to distinguish between an accrual and a cash view as well. So when it comes to the cash view, we will need to figure out how to turn, for example, the information we have in a P&L and a balance sheet and the other information into cash flows. That's the indirect method, and that's most common rather than a direct method. Both of those actually should yield the same results though. And then we'll talk about these ratios as well, because as I said, you start with growth rates, we start with margins, but you can put things into perspective using financial analysis ratios. And that is putting in perspective, for example, accounts receivables and sales. And you can see then the days outstanding, how that develops, what does that mean for your cash conversion cycle and things like this. All of these things are important. Also, when you just talk about profitability. You need to understand the whole picture, the big picture, and this is what we're going to do here in Module 3. And of course, that's a nice segue. As I said, don't omit the balance sheet. So when you talk about profitability, yes, of course, the focus is on the P&L and potentially the cash flows, but it's related to how you manage your balance sheet. And even more, there is a sense check that you can see when it comes to the balance sheet, and that is regarding sensitivity or solvency and liquidity. Solvency means that you are looking at the company, whether it can meet its long-term financial obligations, and liquidity, whether it can meet its short-term financial obligations. So this is what we're going to cover in this module. And this will lead to certain different types of risks in financial reporting and also exposures. This can actually mean that you will finish you will cease operating as a business. So it is absolutely critical that you remain solvent and that you remain liquid as needed. And as I said, don't forget about the balance sheet and the cash flows. And it's all related. So it's not enough to just talk about the P&L and accounting profits, but all of this is linked together through the other statements as well to these ratios like solvency and liquidity. But of course, if you are an investor, you're looking into the future, because most of the valuation methods that we are looking at today are based on the forecasts, right? And present valuing it into today. Therefore, we need to come up with the forecast, or the companies do, but we need to be able to review them and challenge them. So we will talk about how to actually build a financial forecast. Of course, you can start with the revenues and then expenses, and then it's a balance sheet and a cash flow. You can build it in an Excel model that has to flow, it has to work. In other words, the balance sheet needs to balance. The retained earnings from the net income needs to fit into the balance sheet as well. And the cash flow is basically, or it has to fit the difference between the cash positions between two periods. So these are your constraints. This has to work on a going forward basis. And we'll show you how you can use this when it comes to planning, when it comes to budgeting, how companies do this, how can you do your own. And of course, we can talk about stress testing, because many investors, they obviously don't trust necessarily the management projections. People talk about ice hockey stick. Always the forecast goes up and up. There is nowhere a forecast that wouldn't. So how can you actually put any trust in this? Or can you create sensitivities? Can you create scenarios? And that hopefully will be helpful when you deal with uncertainty, because the truth is no one knows the future. We do our best to forecast, and sometimes the process is perhaps more important than the outcome as well. This is what we will cover in forecasting financial statements. And then how can you make investment decisions out of this? I think it makes complete and clear sense. But as I said, there are sometimes decision-making going on, which you could see that it's not really linked to financial statements, because people put a lot of value into companies that are loss-making, perhaps that are not growing, perhaps that they have opaque financial statements, they have opaque disclosures. And I think it's about a good time to come back and do your due diligence. So review the financial statements that are there, the forecasts that are there, the forecast that you can build, and then we will show you how to actually link it to your decision making. Then we can talk about also valuation methods like a DCF, so discounted cash flow, or when you are in financial statements, then DDM, so discounted dividend model. And then, of course, relative or multiple-based analysis, trading comparables or acquisition comparables, and other strategies and the methods and techniques. What you will see in this course, as I said before, and I would like to stress it again, this is not a passive course where you just go through certain videos and then you are done and it's all behind you. We would like you to put some effort into it. I know it sounds like a cliche, but it's true. The more you put into it, the more you get out of it. Meaning, we also prepared some activities for you where you can practice what you just heard in the course videos, what you've read in the materials, and we'll do a quality or earnings quality review for Costco. We will talk about the cash flows and how it relates to the P&L and the balance sheet. We will look at the Costco, whether it's solvent or not, how their margin has been developing, how the Unilever has been growing or not. And of course, we'll do a tough one, which is a DCF valuation of a conglomerate like Google or its parent company, actually Alphabet, right? And similarly, financial analysis and valuation of Tesla as well. It's I think, highly topical company and fast growing tech company in a way, a new player on the block relatively to the others who've been around for 100 years or so. So how do you look at this, and how do you value this? How do you value a company like this using financial statements? As I mentioned, 3 companies here will use these case studies in our course, which is the Costco, so retail business in the United States, Google and Alphabet, that I think everybody would know around the world. You use it as a search engine and for many other services. And Tesla, a pioneer in more luxury and high-end EV cars, and then now maybe also trucks. So we'll talk about that as a final project as well. You will have a debrief with faculty, with Doran. So I think these are great companies, great examples how to learn and apply what you just heard immediately in companies or in circumstances that are highly topical and on top of everybody's mind. And they are conversation starters in many companies, whether as investors who are institutional investors or they are retail individual investors. So program highlights. What we will do here is that, first of all, let's start in the middle. We'll provide you a proprietary financial analysis Excel tool that you can download. We will have live office hours with the program leader. We'll have discussion forums where you can discuss the topics and the materials with your peers as well. We'll do a knowledge checks as well, or quizzes, of course. You will have a final project, which is a case study, and we'll do a live debrief with the faculty as well. And all of the applications that we will talk about are from real life. So these are real life cases in addition to Tesla, as I said, as well. So I think there will be a lot of interaction that will be going on between you, the faculty, the program leader, and you with your classmates as well. So be prepared to participate. This is not just a video that you will watch and sit back, relax. We think that you need to practice as well what you will see so that you can get the most out of it. Certificate. Of course, we will show you on a course website what the criteria are and what the minimum is really for you to get so that you can earn a certificate. I think some people maybe don't want to go for a certificate. I would say if you spend time and money and effort to take this course, it would be good to actually contribute, and then you can get the certificate. You will have a program leader that will help you with your questions as well related to the content, so that you can obviously get moving if you get stuck. And many people then showcase this on their LinkedIn profile once they are finished. So I think this is a great way to do this. The online education, I think it's an ongoing process, a lifelong process. And I've taken several courses like these myself, and the other ones I'm a program leader myself. I think it's a great way to keep on top of things, and I would highly recommend to go for a certificate once you enroll. So you can apply now. You will see here, and hopefully we can put that in the chat as well, or otherwise you can go to the emeritus.org, look for Columbia Business School or Columbia University, and you will find this course, Advanced Financial Statement Analysis, there. And you can download a brochure with even more detail if you like, and then someone can also call you and go through your questions that you might need answered before you decide to take this course. But I would say the point is, this is very practical course. It's leveraging the case studies of real life companies, high performers, or companies that are in the spotlight like Tesla or Costco. And of course, you will, and Google and Alphabet, of course, their parent company. And it focuses us and everyone to go back to the basics. And that is doing financial due diligence, right? Before you spend your own money, before you spend your client's money, let's look at what's out there in terms of public disclosures and see whether there is some insight that it can give you so that you can make better investment decisions. You can go to emeritus.org, search for Columbia, and you will find this course there, Advanced Financial Statement Analysis. And otherwise, also, you've seen a picture or a snapshot of the link straight to Columbia grad school. So you see it here now in the chat as well, exactly. So either way, you get to the same link at the end, and there you get the brochure, and you can decide to enroll, register, and you can also get a follow-up call from an advisor from Emeritus that works with Columbia to deliver this. Do you use Excel or Python for this course? I think this will be Excel workbook, right? So I think you will just find the typical Excel formulas there, but not necessarily Python. After the completion of this course, what are some of the other finance courses that could be helpful? And of course, I would recommend first one that comes to mind is M&A, so mergers and acquisitions. I lead this course as well. I've done this many times. And I think if you have a financial statements grounding from this course, you combine it with an M&A course, you will be really positioned to do either investments or M&A. You will be strong in both sides, in corporate finance and the accounting as well. I think that's one. And then the second one from Columbia is called Investment Strategies. So you can then focus on the investment side of things now that you have a solid and, very strong founding and background in financial analysis. You can focus on investment analysis, right? From Columbia, and investment analysis from Columbia. And then perhaps a little bit further from this, I also lead a course on options strategies. So that could be as well. Some of the financial statement analysis can give you insights and can give you prompts for you trading not only the traditional underlying equities or debt, but also derivatives like the options. So we also have an options trading course as well. And then lastly, there is another great course from Columbia that I lead is called Scenario Planning. And scenario planning is complementing the budgeting or strategic planning that you see in organizations. It is not very quantitatively heavy. It's more to have to think about with long-term trends and be a little bit free of the shackles of the recent history. So I think it's really not contradicting what we are talking about here. And when you say we need to really look into the past, then we can look into the forecast and we see what we can get out of it as insight. But it's complementing in a sense that you also sometimes need to look even further and you want to treat it as a brainstorming exercise, really. So scenario planning is yet another one. So I think M&A, then investment analysis, options strategies, then also scenario planning. And otherwise, there is a course on private equity by Columbia, and that's also something to bear in mind. All right, so you can check out the link. It's in the chat. As I said, you can go to emeritus.org and look for Columbia and then Advanced Financial Statement Analysis, which will lead you to this link, which says here online1.gsb.columbia.edu Advanced Financial Statement Analysis. So that's another way. Either way, you'll get to the same link and then to the same brochure, and then you can register. If you also have any further questions there, you'll find a contact there for program advisors that can help you to make a decision when you're considering this course. Please check out these links. Please check out our website, and then you can enroll, and hopefully you will take this course and you will find it useful. I honestly believe it's a great practical course. It always comes out from Columbia Business School, outstanding faculty. I have a great experience with all the faculty I've been working with there. So I'm sure you will have the same, and looking forward to see you there. Thank you.